Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. India's trade deficit narrowed in June as a slowing economy and lower oil prices curbed the import bill. Government is looking to raise close to 11,000 crore rupees from the sixth tranche of the CPSE ETF, according to a senior official. The offer will open on Thursday. Three IL&FS group entities enter binding agreements with secured lenders as part of their debt resolution process. And the Reserve Bank of India imposes a 7 crore fine on State Bank of India for failing to comply with fraud and income recognition norms. Well, good morning, and it's just that kind of a morning wherein the world markets tell you that it's going to be a very, very tempered day of trade in the session today. Firstly, before we get to that, what happened overnight, amongst other things, some updates. Stephen Mnuchin has gone out and made a couple of comments on the trade war, nothing too dramatic, but he says that the trade call with Chinese officials may happen this week, and post the call there might be a meeting that may happen in China as well. So there are some updates with regards to ongoing progress with regards to the trade resolution or the trade war, as whatever you want to call it, between US and China. Nothing too dramatic, and that's why, despite these comments or otherwise, the US markets, if you see what they did in yesterday's session, virtually nothing. It was an absolutely flat day of trade, and while Nikkei may be starting off about 0.5% lower, a bit of a catch-up as well out there, but the rest of the Asian screen tells you what kind of a start it has been to those markets, and the SGX Nifty tells you what kind of a start could we have to our markets. And frankly, I mean, we may all crib and ponder over what's happening in the Indian markets, and they are directionless and not going anywhere and a bit tempered in the month of July. Across the Asian screen, that's the picture really. If you just look at the MSCI Asia Pacific Index, after having some volatility and some rise, this chart shows you that how this month of July, the equity rally in Asia has completely petered out, either gone lower or stayed flat, but has definitely not gone higher, and has largely been low volatility for the Asia Pacific Index at large. I mean, that's essentially the story of these markets. Frankly, India VIX 2 tells you that simple story. Really, volatility has just come off completely. In terms of news flow, this is the India VIX at 12 levels. That tells you a story, doesn't it? Now, in terms of news flow, you could argue that it's a small positive, but it's also an indication of where growth is, because trade deficit has narrowed in the month of July, ever so marginally, but it's come off. So the June deficit is at about $15.28 billion versus $15.36 billion in the month of May. And you all know why this would have happened, right? Crude prices are lower, so though that import bill is lower, slower growth, and therefore people imported less, all of that leading to a lower trade deficit. Should we be happy about it? Yes, on the headline numbers, it's okay, but it just points towards what everybody is shuddering about, which is a slowing economy. What does this do to the markets? Well, yesterday the markets showed a bit of their hand, right? Had it not been for Infosys and Nifty IT, we would have had a very flattish day of trade, irrespective, or maybe marginally lower as well. It was Infosys and it was Nifty IT which helped keep the Nifty in the green. Else we would have been in the red or very, very flattish. But yet another low volume day, and it showed in the way the institutional participation was as well. FIs pulled out a measly 200 crores, DIs put in about 591 crores. Those days of 1,000 crores of inflows and outflows from both the institution side have completely gone away. I don't know if they'll come back in a hurry or no, but for now, it's low volume day, low institutional participation, and low FI and DI participation as well. In light of all of this, what should one do? Well, maybe be bottoms up, maybe stock specific. There are a bunch of important financial names. We've been talking about this yesterday. A bunch of important financial names that come out of the results this week. Starting today, you'll have DCB, you have Federal Bank, you have HDFC, AMC, all coming out with numbers. So this will keep the non-Nifty broader end of the financial market side active. There is also Piramal and the likes which are in news, and therefore that financial space will have their own sets of stocks to watch out for. In terms of newsmakers, the 4 or 5 names that I thought are important and therefore should be pointed out right now. One of them is Ashok Leyland. Well, one more company and one more indication of the slowdown in the auto space. The Pantnagar plant will remain shut from July 16 to 24 owing to weak demand. We've seen a number of companies do that. Now Ashok Leyland also joining that fray for this plant. Dishman, that's a small name but could be very active today. GSK announced positive data in phase 3 study. Dishman makes the key API used in this drug for GSK, and therefore Dishman Carbogen could be an important stock to monitor in this session today. API revenues, according to HDFC Securities, may grow about 2 times over the next 2 years as a result of this development. So do watch out for this stock for sure. Do watch out for L&T Technologies, not because of any other news, but for the fact that HSBC has given a very stiff upside to that stock. They've come out with a buy rating and a target price of about 2100, which is well northwards of about 21% upside on L&T Tech from these levels. So do watch out for this one, may react today. And a couple of disappointing numbers, Tata Metallics, and Automotive Stampings, both of them had issues at the EBITDA level. Tata Metallics, EBITDA down 32% as a result of which EBITDA margins too came off. But this stock, EBITDA down 32%. Automotive Stampings, small stock, but EBITDA loss versus a profit. So both of these stocks, very poor numbers, could react slightly negatively in the session today. Not very high volume stocks. Tata Metallics is, Automotive Stampings ain't, but could be reacting in the session today. Well, let's tell you what's lined up on First Word today on a rather lack of news flow day. The top stories that we want to bring to you. Double whammy for Indian steel makers as volume and prices falter. Nikki Mirchandani will tell us how things stand. Drug makers too are facing a slowdown in the domestic market. Darshan Mehta will tell us what's hurting those companies. And mutual funds have been super selective about their bets in the first half of 2019. Yash Upadhyay will join us with a snapshot. Lastly, Nikunj Johri will tell us all about the 6th tranche of the CPSE ETF. Start off with metals. Indian steel players are going through a rough patch and it doesn't seem to be getting any better in the near future. Volume growth was muted for most large players in the first quarter and spreads have also narrowed over the last few days at least. Nikki Mirchandani standing by with the latest data and what to make of it. Nikki, good morning.
Good morning, Neeraj. Things are really not getting better for the steel sector. Fundamentals have been deteriorating. If you look at the HRC prices, they have been trading at a December 2017's low. But then let's get on to the factors which are actually impacting the sector as a whole. We've been witnessing liquidity issues in banking system and the NBFC system as a whole, which in turn has had an impact on the kind of demand that is otherwise would have seen coming in for the steel sector. Also, auto slowdown is majorly affecting steel demand. If you look at the HRC prices trend here, well, it's the 6th consecutive week of cut for steel makers out here. The steel prices have been on the downtrend. $40,000 rupees per ton. That's the kind of level that now, as of July 10, the prices were trading at, which is the lowest that we've seen at least in December 2017, mainly on account of weak demand and also the international price trend, which in turn is impacting the steel prices back home as well. Look at the spreads. They've been contracting. 2-year low level for the spreads. Raw material prices, they relatively have been unchanged. And if you look at we just saw HRC prices, they've been on the, they've been trending lower. So on back of that, you're seeing the spreads also now contracting back. If you can bring back to the chart there, we have been seeing a contraction or witnessing a contraction there to July 2017's level out there. Globally, Tata Steel also in its press release in the Q1 update put out that globally too, this is the trend which has been all the steel players across the globe have been witnessing this trend on account of the downtick of prices and higher raw material cost majorly coming in from iron ore prices. And then if you look at the performance which the 3 players have reported so far for the quarter ended June. Production, if you look at the figure first, divided into 3 players. SAIL has not reported the numbers as just yet. Tata Steel India combined basis, we've just seen a 2.5% growth. Partially also got to do with the fact that they're operating at a higher utilization levels. Besides that, we've also listed down the number of reasons which are leading to the demand slowdown for these players. JSW Steel has witnessed a 3% growth, and JSPL, for them, it's a relatively better phenomenon, or they're expected to outperform the peers, mainly on account of the kind of capacity expansion that the players are undertaking this time around. Also, if you look at the sales, 2 reasons, inventory build-up and the lower production, both go behind the making of the sales number, which now at this point of time look very subdued. For Bhushan Steel, it's clearly attributed the sluggishness across the regions to be contributing to 1.2% number year-on-year basis. India basis for Tata Steel, it's a 1.3% growth. Both combined, we've seen a 16% growth. But do bear in mind the fact that these numbers are not fully comparable because of the inclusion of Bhushan Steel only back in May 2018. European business, 7.3% downtick, and if you look at the Southeast business, that's a 2% uptick there. So net, things are not going to change anytime soon, or aren't looking to be changing for steel industry anytime soon.
Well, that's interesting. Thanks a lot for that, Nikki. The data isn't the most optimistic, and from the looks of it, things may not likely change anytime soon. Well, a small story around this there on the website as well, so do log on to bloombergquint.com and try and read up more about this. Should you feel the need that there is data which might help you make any kind of investment call or a sector call out here. Well, if things are not looking good for steel, there is fatigue that is set into the Indian pharmaceutical market as well, with the industry clocking in the slowest growth in the last 2 years for the month of June. What's causing this weakness? Darshan Mehta is here to tell us about that. Darshan, good morning. This is the domestic market that we're talking about.
Yeah, this is domestic market and the domestic official data that has come out. This does not include some of the unofficial data that is there, but the official data does indicate that there is a slowdown. We've taken it across a few parameters. First of all, the growth in June was 6.6% for the Indian pharmaceutical market, which is the slowest in 2 years. The growth in the first quarter itself was up almost 7.9%, which is the slowest in the last 7 quarters, and the volume growth was down 0.6%, is the lowest in the past 7 quarters. But the problem is it's the second month in a row that we've seen a negative volume growth despite price hike being taken. So this gives an indication that the growth has actually come in because of price hike and not because of volume growth that is there. Now, in terms of what has actually what has done well, what has not done well, let's take a look at some of them. First of all, most of the therapies have shown a single-digit growth, so that is something of a bit of a concern. The dental and urology have actually bucked the trend. They've managed to show in industry leading growth this time around. And finally, acute lags segment lags the industry growth. Chronic did okay, but acute was the one that actually came in, didn't do well as at this point of time. Some of the drug makers that did well and did not do well, so companies like Eris Life, Ajanta Pharma and Cipla saw the biggest slowdown, while companies like Dr. Reddy's, Ipca Labs and Abbott saw the highest growth, and we'll talk about them in details. We spoke to some of the analysts and read some of the reports that came out and what they make of this entire deal in terms of the slowdown. Ambit, for one, is saying that the growth is not encouraging at this point of time, but they do not see any kind of structural slowdown at this point of time, but they admit, yes, there is a slowdown that is there. Jeffries is saying that the volume is declined while the pricing is stable, and that is a bit of a concern because the volume growth is not simply coming in. Elara Capital said that there were a fewer launches post the FDC ban and a pickup in trade generics. Trade generics means the generics of the generics that are already there, and that is hurting. So the unofficial market is something that is hurting them. And HDFC Security is saying that multiple distribution channels are now showing are driving the slowdown because there are much more avenues that are coming in, unofficial channels that are coming in. That is also driving the slowdown for the primary market, the official market.
So, okay, so domestic markets and those companies, they get impacted out here. Which are the ones that stand out?
Yeah, so we'll talk about the listed companies which are there
Sure.
and how they get impacted. First of all, the big one was Sun Pharma. They came out with numbers which were in line with what at par with the industry. Some of the smaller brands saw slow growth due to exit. So it was the larger brands that led to the growth in Sun Pharma that came in. Lupin came out with decent set of numbers ahead of the industry, and they recovered from the May lows, and that was led by the top 10 brands. So the bigger brands are doing. Cipla lagged the industry this time around. Most of the therapies except for pain and CNS moderated for Cipla. Dr. Reddy's, they are saying that that grew well above the industry average. They gained market share in acute and chronic, but in the subchronic segment they actually lost market share. The other one is Torrent, muted in line with the industry. Slowdown was led by the top 100 brands. And finally, Alchem saw stable growth this time around, was ahead. Brands outside the top 25 actually gained. So it was the smaller brands that gained. But the overall, if you put the data together, it seems that for the second month in a row that we are seeing a bit of concern because the US market is not growing and everyone was betting on the domestic market, and a slowdown seems to be setting here also in the domestic market now.
Well, that's not good news. Definitely not good news for an industry which is starving for good news. Darshan, thanks so much for putting that into perspective. And again, you can log on to our website, bloombergquint.com, and try and read more about this stories there put up by Darshan. Do watch out for these set of companies. Some of these could be interesting to monitor over the next few months. Well, speaking of companies and speaking of companies to monitor, while 2019 has been topsy-turvy for Indian equities and mutual funds as a whole, fund managers have been very picky in their investments into specific companies so far. Data collated by Bloomberg on the monthly buys and sells by the top 3 fund houses show little overlap. Yash Upadhyay is here to tell us, take us through the top buys and sells and try and give you a trend of what at least the mutual funds are doing to help you maybe make your investment decisions. Yash, what stood out?
So what we've essentially done, like you rightly mentioned, is that collate all the monthly information of the buys and sells by the top 3 AMCs over the last 6 months, and we've tried to establish or find if there is any trend that sort of stands out, and we have in fact seen that. So I'll start first with and which have been the top buys and sells in this period. I'll start first with HDFC Mutual Fund. It's the largest AMC by assets under management. It has about equity assets of more than 1.5 lakh crore rupees. And what we've seen is that they have had a liking for the financials and the PSU names in the first 6 months. So right at the top, we have BHEL and NTPC, wherein they have bought more than 3 crore shares in the first 6 months of this year. Along with that, there has been significant amount of buying coming into the financial names. So Bank of Baroda, Federal Bank, as well as Karur Vysya Bank. It hasn't quite done that well, but they have been positive on these names. And Federal Bank, in fact, it's up almost 15% on a year-to-date basis. On the other hand, they have reduced their exposure in the energy names. So GAIL, Power Grid, and Petronet LNG. These are the 3 names that stand out here, all of whom have seen considerable amount of selling. But GAIL India, that tops the list. Almost 4 crore shares sold in the first 6 months, and GAIL, as we know, is down more than 12% on a year-to-date basis as well. But moving on, let's also take a look at how the trend has been for ICICI Prudential Mutual Fund. And again, what stands out over here is the IT and the telecom names. Now, Infosys, which came out with extremely good set of numbers, the stock ran up almost 8% yesterday. They have been consistently buying it over the last 6 months, and they've added, more than 9 crore shares in the company. One name that stands out, and in terms of the number of shares, is Vodafone Idea. But do note that there was an OFS in the month of April, as a result of which we see that huge number. But even if you take that number out, what we have seen as a trend over the last 6 months is that most of these months, in fact 3 to 4 times in the last 6 months, there has been longs in the telecom names, both Vodafone Idea as well as Bharti Airtel, as well, and the fact that we've seen the considerable amount of buying in these names. On the other hand, they have sold into some of the financial names, so a bit of a counter trend to when it comes to HDFC Mutual Fund as well as ITC, wherein they have sold more than 4.5 crore shares. A few private banks also featured in the list, but SBI stood out as 4 out of the last 6 months they have been selling in SBI, and have almost sold close to 5 crore shares in SBI. But moving on, lastly, let's take a look at SBI Mutual Fund. It has equity assets of more than 1.6 lakh crore rupees, and they too, as a trend, have been buying the telecom names. Again, the disclaimer stands. There was an OFS in the month of April in Vodafone Idea, is why you see this big number. But power was a theme wherein they had been buying for the first 3 to 4 months. So Tata Power stood out amongst that pack. They've added close to 3.5 crore shares, as well as SBI, wherein they have added 2.5 to 2.7 crore shares in the last 6 months. And on the other hand, they too have been selling in the energy as well as some metal names. Nalco stands out at the top with almost 1.37 crore shares sold there. There is HPCL. There were a couple of instances of BPCL, Oil India as well. So the energy names, they have seen selling when it comes to SBI Mutual Fund as well.
That's interesting data, Yash. Thanks for that. 2 things which stand out. One, ICICI has been selling SBI, but SBI Mutual Fund has bought into it, not with the equal gusto, but almost half of that quantity, of so to say. Yeah,
so across the board for all 3 of them, mostly they have been buying into most of the banks and financial names. But once in a while there has been some selling seen in a Kotak Mahindra Bank or an ICICI Bank in between. But generally the trend has been positive when it comes to financials.
Yeah, but SBI stands out. But the other one that stood out for me, and Naren was speaking about this at the BQ Edge event in Chennai. This was before the elections. But he would want to bet on telecom. Seems like SBI MF and ICICI, both of them are betting really big on Vodafone Idea.
And Bharti Airtel, in fact, on a year-to-date basis is up more than 20%.
Yeah, so it's interesting data. Thanks so much for putting that into perspective, Yash. Well, if you want to know what the biggies are doing, the top 3 funds, and not just what they did in the month of June, everybody does that. We are trying to tell you what they've done in the first 6 months, and these are some trends. Now, you got to ask yourself, Vodafone Idea or a Bharti Airtel, promoters are putting in money because they've subscribed to those warrants and at a lower price, subscribed to those rights issue as well, Vodafone Idea, Bharti Airtel. And the large mutual funds are buying into telecom as well. Vodafone Idea stands out there. The stock is languishing, but you never know. It could be an interesting one to look at over the course of the next 12 months. This year has been a poor performer. The question is, can it recoup some of the losses if indeed rates move up? That's the million-dollar question, isn't it? We'll get to know about it. Okay, moving on. The government's looking to raise up to 11,000 crores from the 6th tranche of the CPSE ETF. The issue manager has been tasked with another job before the ETF is open for subscription on Thursday. Nikunj Johri has those details.
The government plans to raise about 11,000 crore rupees from the CPSE ETF's further fund offer, which opens for investors on July 18th. The CPSE ETF further fund offer 5 will have a base offer of about 8,000 crore rupees and a green shoe option of about 2 to 3,000 crore rupees, according to a senior government official. Whether the government will exercise the green shoe option or not will depend on the market conditions, according to the official. The government may also offer a 3% discount to investors, but the discount may be slightly lower since the asset management company managing the CPSE ETF will have to buy shares of Indian Oil Corporation first, since the government intends to keep its shareholding in the company to 51%. And remember, the government holds about 52% in IOCL currently, and since the weightage of the company in the CPSE ETF or the CPSE ETF index is over 16%, the government doesn't want to disturb that weightage that the company has been given and plans to buy the shares of the company before divesting it in the CPSE ETF. Over to you.
Well, that's the update from Nikunj, and frankly, the government stake coming closer to 51%, like in I would say 51.5% if I'm not wrong. As Sajid also mentioned this in his tweet yesterday, the CPSE ETF in all likelihood as a vehicle for divestment might lose its relevance. So will we see more such tranches? Well, we already know that it's going to happen. Thursday would be the 6th tranche as well. Would there be further innovative ways to try and figure out how to divest with enough appetite at a time when category 3 AIFs might not be subscribing due to tax issues is the million-dollar question. Divestment is necessary. The government wants it. Will they be able to do it well with the kind of tax changes that they've announced? That's the key question. And maybe some answers will come out on Thursday. We'll probably try and talk to a few people who have been traditional investors into these ETFs to try and gauge the appetite in a slowing economy and a differential tax structure. That'll be very, very important, because remember, as we wrap up this leg of First Word, remember, it's not just what happens to this tranche of the CPSE ETF. The target for divestment is a stiff 1,05,000 crores and not 11,000 crores. That's all that we have on First Word today, but lots more lined up on Indian Open. We take a look at some key technical indicators for the Indian markets with Gautam Shah of JM Financial Services. A critical juncture, so this is a very important conversation to have. We'll talk about Metropolis Healthcare's growth strategy as the stock hits new highs with promoter Amira Shah, and decode India's trade deficit numbers and other macro indicators with Chief Economist at CRISIL, DK Joshi. But after this break, a full tilt towards the day's trade.